Hello, this is Quan Reinvest. Today I'll be talking about why exactly Google is a dying business. So if you looked at Google stock in the past 2 weeks or so, it's basically down in a straight line. It's down more than 18%, I believe. And the sentiments for it has also changed completely. So when it was at $200, everyone was saying that, oh, Google is the biggest AI company in the world. Google is going to lead everyone with their computing chips and all that. And then now Google at $170 suddenly became a business that is losing out market share to ChatGPT. So I'm not sure if you guys have tried Grok yet, but Grok is incredible. And if you just look at all these LLMs and the trajectory, so they'll do analysis for you, they'll do research for you, they'll find every single information that you need. And so one of the bad theses for Google is that all these LLMs, they'll start taking away market share from Google. But is that really true? In the past month, Google searches went up. Next one, a small minority of people use Google search for research purposes. The vast majority of people use Google search to go search for a restaurant, search for an airport, search for itinerary, not so much the research papers. So yes, LLMs will eventually take a bigger market share, meaning they'll take some market share away from Google. But to say Google is a dying business is just ridiculous. So there's another bad thesis for Google, which is that the paid ads impression is dropping, meaning to say the growth is declining now. And if you extrapolate that from the pandemic and 2021 as well, the drop is quite massive from, I believe, around a 30% down to now a single digit growth. And so now the argument is that less people are spending money, less people are spending ads on Google, and that's why the impressions are dropping. And the only reason Google is able to sort of inflate its earnings is through its pricing power. And so if you compare it with Meta, right? Meta's one is also declining. So it doesn't mean that two bads make one good, but it's a macroeconomic trend. Neither is it a structural problem for Google. Next one, third bad thesis is that Google's AI capex spending is just ridiculous at this point. So yes, the AI capex spending is sort of like a hindrance, meaning to say if it doesn't pay off, then it will hurt Google shareholders for sure. But from what I've seen so far, what Google is actually doing is they're trying to make their ads more targeted for consumers. Meaning to say they want people to spend more on ads but get more results at the same time. And as for the argument earlier about their volumes declining, if you have a company that has so much pricing power like Google, because where else are people gonna advertise if not for Google? So if you have a company with so much pricing power, then I don't see the problem with the volumes declining. In fact, if the volumes can just hold mid-single digits, and they exercise their pricing power as well, although I'm not expecting that in the near future anymore. So here are some of the bull theses for Google. So yes, Google has Google search, which is sort of like a dying business as everyone claims it is. So you have Google YouTube as well. So Google YouTube is an incredible business. If you think about it, it has zero innovation risk because it is just all the creators online just creating videos. So they don't have to innovate like Netflix. And another thing is that they have a recurring revenue business model via their YouTube TV. And if you look back a few months ago, they doubled the YouTube subscription price and people still sign up for it. So that is just incredible pricing power at this point. Next one, Google YouTube basically has no manpower risk for their shows and all that, and then they keep the other half. So it's an incredible business model that I think is underrated in this market today. And the fact is that if you compare Netflix, which is around a 50 PE, as compared to Google YouTube, that is just incredible. Next one is Google Cloud. So Google Cloud is the smallest cloud provider out of the three main ones. You have AWS, you have Azure, and then you have Google Cloud as well. So Google Cloud currently holds around 10% of the total market share. Google Cloud now is growing at around 30%. So I expect them to continue growing at 20+% for the next few years or so. Their operating margin now is only at 14%. Azure is around 20 plus, and then Amazon AWS is at a 37% operating margin. So this is going to become an incredibly profitable business for Google. And same thing, I think people are underestimating it as well. How can you price Google Cloud as part of a 21 PE company right now? It is literally one of the fastest growing cloud provider in this world. So if you think about it, if Google can increase their operating margin on Google Cloud, you could easily see Google Cloud making up maybe 20% of the total net income in the future. And it is going to be an incredible business for Google, just like how AWS is an incredible business for Amazon. And if you were to compare to Amazon right now, the Amazon Web Services is around 57% of their total net income. Cloud compute is going to continue growing, so Google is going to be one of the front runners for it as well. So let me talk about some valuation for Google stock right now. Google's valuation right now. So Google is trading at a 20 PE now, and as you can see, revenue has been growing quite steadily. Net income has also been growing quite steadily as well. And so if this is what you call a dying business, then I have no idea what you're saying lah. the fundamentals of Google has been amazing. It's buying back shares consistently. It's growing its organic revenue quite quickly as well, and net income grew 35% year on year as well. That's just incredible for any company in general. So if you look at Google over here, I have two different valuation. One of it was this one over here. I did this one previously before they released their earnings, and I got an intrinsic value of $191. So I reevaluated it. It's slightly lower now because the PEs are a bit more adjusted. But if you look at this portion over here, so let's say these are all the worst case scenarios. So let's say you have Google search and the Google network, and then the subscription stuff as well. So if you were to include all those together, Google's operating income is around $95 billion, giving it a net income of around 84 billion just from this portion. And so if I assign a 20p for it, a 20p for business growing at 13%, it gives me about $136 for this portion over here. I think 20p is more than reasonable for this portion over here. You have search growing at around 10%, you have Google network which is flat, and then the subscription business is growing quite steadily as well. So I think 20 PE is more than justifiable for this portion. And then you have YouTube over here. YouTube is around 12 billion in operating income and then 10 billion in net income. So for this YouTube portion over here, I assigned a 30 PE for it. So if you look at Netflix PE, Netflix is trading at around a 50 PE. So again, this is more than reasonable for YouTube. It is a better business model than Netflix, and I'm putting a lower valuation for it, and it comes up to around $25. And then the last portion, which is Google Cloud. So Google Cloud over here, the operating income is still relatively low because cloud only has around a 14% operating margin now as compared to AWS, which is around 37%. So I can see this growing exponentially over the next few years, but taking the current metrics now and putting a 30p for it, which is again lower than its peers, it gives me around a $13. So if I were to sum all these parts together, this is by far one of the most bearish ones that I have come up with so far. It's around $176 intrinsic value for Google. So basically what you're getting now is you're getting Waymo, you're getting the XAI stake, you're getting Gemini, and you're getting their quantum computing ventures and all that, and their stock portfolio for free. So if you're paying $171 now, basically you're getting all this for free. You're getting the worst case scenario for all these three components over here, which I feel is just incredible value for a business like Google. So yeah, my previous one was around $191. Now it's around $176 for the more bearish case over here, since Google is dying, as everyone says it is. So yeah, I still think the stock is extremely undervalued. You're getting everything for free. It's not even priced for any sort of premium. It's a quality business. Imagine one day without Google, everyone will start crumbling.